There was a lot of technical selling as well. I think both below their 50-day moving averages. So did the rally look a little bit overdone at this point?
There were signs that we were in for a correction, and you are correct. A number of factors weighing on oil. Let's drop right into the Bloomberg to see what Sherry was referencing about the 50-day moving average. We've seen oil prices come back in line with this latest decline. But bottom line, the rally has cooled, and there's an old saying in the oil pits that the cure for high prices is high prices. Demand destruction has begun, one prominent analyst says, and that means that fuel costs have squeezed consumers in a way that demand rather abruptly pulls back. Let's look at the 5-day charts for both West Texas Intermediate and Brent to get an idea of how abrupt this halt in the rally has been. We saw West Texas Intermediate in New York trading a drop well over 5.5%, closing the day down 5.6% to below $85. In Brent trading in London, a similar sell-off, down 5.4% by the end of the day to close right below $86 a barrel. And again, this is a dramatic reversal of a rally that has seen oil rise some 40% since mid-June, aided in large part by the fact that the OPEC Plus members extended their voluntary cuts to the end of the year at a time going into winter where global demand had peaked to a record. Now, we are seeing signs again with this gasoline data that demand is pulling back, but that was a scenario on which the rally began. Now there are a lot of factors, including the technicals, the concern about longer interest rates being at high levels, all of this resulting in this dramatic pullback.
What did we learn from the latest meeting of OPEC members, Sue?
Well, going into this monitoring committee meeting, we did not expect a change, and that's exactly what happened. Saudi Arabia and Russia will continue to extend their voluntary supply cuts over and above what OPEC Plus is doing into the year end. And these curbs amount to more than 1 million barrels a day, even as we're getting signs in the past few days that demand is faltering. You're looking at what OPEC has done to sort of reduce the amount of oil on the market that's resulting in a squeeze that resulted in an extreme rally that just yesterday saw Brent prices in London trading at almost $100. So again, we're coming back from those levels. The Saudis slashed production in July by a 1 million barrel a day amount over and above what the rest of the cartel was doing, and Russia joined in with them by curbing by 300,000 barrels a day their exports. Those two voluntary cuts again extended to the end of the year, and that was announced in separate statements released from OPEC today. The monitoring committee says that they will continue to monitor oil conditions, but it has been the OPEC aim to keep prices steady, and what they mean by that is to keep them at an elevated level. So this is an interesting wrinkle after they were fairly successful in raising prices.